Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 98 for October 15th, 2019. My name is David Kosmeter. I'm the creator of Timing Research, and we are recording this at 4 p.m. Eastern Time. And over the last few days, about 30 people submitted up to 5 symbols each, and I've put the list together. You should have seen that in the email you got to access this episode if you're subscribed. But we're going to go through as many of those as we can today, and as always, the recording for this will be on Timing Research as well as the Timing Research YouTube channel and podcast channels as soon as the episode is over. But today I've arranged for Mark Sachs and Jim Kenny to join us, and Jim will be moderating, so I'm going to go ahead and turn it over to him.
Great. Okay, welcome everybody. I'm Jim Kenny, and with us today is going to be Mark Sachs. Mark has been here before with us, so many of you are already familiar with Mark. I would like to let everybody know that last time I was talking to Mark about a week or so ago, he was one of the things he was watching was the Commitment of Traders reports, and he had noticed that a lot of large money was being put in into the S&P 500, and that's 100 S&P points ago. So hats off to Mark on recognizing that Commitment of Traders report indicating obviously some big money coming in. And that certainly is exactly what has happened in the last week. So again, without further ado, people know Mark already, but from RightLineTrading.com, Mark will introduce himself right now.
Hey, thanks, Jim. My name is Mark Sachs. I'm from Right Line Trading. And just a little bit about my background. In my undergraduate and graduate work, I did a lot of work in mathematical modeling, and our system is really based on doing multi-time frame analysis and looking at the market as a closed system, determining which forces come to bear on price, and are responsible for moving price off the right edge of the chart. As Jim had mentioned, when I analyze the market and I analyze a trade, I look not only at the technicals, but I also look at other parameters such as what's happening with big money. I pay very close attention to large options trades. If any of you have tickers that have been crossing recently, an options monster or Benzing, showing a big commitment to traders and big money. That's a really, really bullish sign. Insider buying, insider selling, basically putting together a gestalt about a stock and making a determination as to whether or not it's going to, in my opinion, rise or fall.
So today we're going to go through, we have 15 of them, but not only are we going to go through, but Mark will be able to give some of the things he's focused on as well, which will be very interesting. But we're going to go through a number of these stocks that were handed in that people wanted to get a little information on as far as what you're seeing, what your opinion might be on them. So if we could, Mark, can we start out with SIX, which is Six Flags Entertainment, SIX. Sure. And it's a stock that according to my screen here, closed at $50.55, up about a 1.7%. And it's a yielding stock, looks like, at 6.5% dividend, according to my screen. And the P ratio is about 15. So basically, it's closer to the low of the 52-week range, which was 46. Is there value here? Is there a turn here? Or what are we thinking?
Could you give me that ticker again?
SIX, like the number 6.
Sure, SIX, got it.
Yeah, and it's Six Flags Entertainment. They got the entertainment parks and all that kind of stuff.
Okay, well, technically, I actually see it in a bullish pattern, and I can show you right here. Let me just go to the drawings. And if you notice right here, oh boy, I'm not a great drawer here, but notice right here, oops, you've got a precipitous drop in the stock
Mm-hmm.
in price all the way from here to here. And I'm not really, for some reason, I'm having a little bit of a trouble drawing. It doesn't really matter, but you have a precipitous drop here. And essentially what you have is a bull flag pattern. And I wish I could draw this a little bit better here. All I want to do is add a line here. And I'm not doing so well here. Add a trend line.
I got you. Yeah.
Right here. Here we go. So we go from here to here. And then if you'll notice on this one day, we have this big move down here. And then what Six Flags is doing is it's moving up. Well, I should do the hotkeys, but it's moving up, consolidating, moving up, consolidating, moving up, consolidating. Now it's gapped down, but then it's moved up and consolidating. Now another way of looking at it is this. And also, you have Six Flags. In a consolidation pattern right here. It's wide base consolidation, but it's still consolidation. Right about here. So here's the channel. Here's the drop. Here's fairly wide base consolidation. And if I had to take a guess, we've got the overall trend here green. We've got the advanced decline line positive. And I would look for a breakout right here above 50.77. But the way I would play this is this. I would, as you do every trend line, you're going to look for the breakout. I know there's a really easy way of doing this, and I'm not doing it that easy way. Let me pull this back in. Here, actually, what I'll do is I'm just going to move this. You know, what you do is you're going to play. Geez, I'm sorry here. Okay, here we go. You're going to let the stock break out through 50.77. Let it come back to test 50.77. And then if it makes a successful move up off of 50.77 on the retest, I think that's where you got your nice buy. and your potential high of the move. And you've got a long move if it does this, because I'd have to squeeze the chart. But your first area of resistance is right here. It's right up here. So you've got yourself a nice move. If you use this on an options position, you've got yourself a nice move to the upside. Now that's the first area I would worry about in terms of resistance, about 54. So you got to move up of around 50, 55 up to a first area of resistance of 54. And that's how I would play Six Flags. It's just, I really like the pattern that it's in. I like this consolidative pattern. I like the fact that this is a multi-time frame trend analysis has gone green. And I like the fact that it's at the top of the channel. I would look for the breakout, the retest, and then the move up, and the continuation to 54.
Yeah, this stock has moving averages of the 50 and the 200-day around 54, 53, 54. So that might be an area where it might gravitate toward.
Right. I didn't put any moving averages in here. I purposely just left. I just wanted to do this technically off the trend lines.
Right.
And they would correlate. So we're looking right at a move to 54. And I like this pattern, and I think you're going to get a break of resistance here, right at 50.74. You still want to play the breakout because a lot of breakouts fail. We want it to come back to that area, which now becomes an area of support once it's broken, and have the stock move up off of that area, which has now become support, and then continues to head back to the upside. There have been no major options trades on Six Flags. I watch that really carefully every day, but that certainly doesn't mean that the stock doesn't have the potential to move up higher. So,
can you see insider activity easily?
There's really none either. I do actually both Benzinga. Benzinga gives you all insider trades, even small ones. Anything that requires a 4F, I think it is.
Right.
Crosses the ticker on Benzinga. I have not seen any insider buying or selling on Six Flags. This is the first time it's been brought to my attention, and I actually like it as a potential candidate to break out. You just have to be careful right here that it just doesn't that it really does clear support or resistance here. It doesn't give you a fake out. Gives you a nice 50 cents up, then back, and then a nice move up.
All right, let's switch gears here and let's go over to the biggest stock on the board, or one of them anyway, Microsoft, MSFT.
Okay.
And obviously it's pressing up against all-time highs, and PE ratio is up around 27 now, 28. And what's going on here? Is it a situation where we're going to get continued upside, or is this an area where take some chips off the table?
Okay. I happen to follow Microsoft really closely. So I can, let me just add the ticker, MSFT. Now this is it'll take about 15 seconds to load. I have it on my watch list, which is why I can bring it up on my own software.
Mm-hmm.
And I can just tell you off the my personal opinion is that Microsoft has a lot of nice upside. I really there have been decent trade. There has been decent options crossing on Microsoft, I have to actually go to 150 days of data to give us a better picture of it. But if you look at the right edge here, you can see that Microsoft is really poised to move higher. And I can tell you that I have a spread on Microsoft myself, and I have an options alert newsletter, and every trade that I recommend in there I take with my own money, and I traded in Thinkorswim. And while we're waiting for that, I'll tell you the call spread. It's a bull spread. And I think that Microsoft has got room to move up, and I think it's still loading, but it might not be. We'll just have to. We may have to use just the right edge, but my spread on Microsoft is a November 140 145 call spread, and right now Microsoft is at 141.76. So I am definitely bullish on Microsoft. I think it's good at least to 145 or higher. And if you look here at the chart, even though for some reason it's not loading as much data as I would like, we can also look at it on Thinkorswim. You can see off the right edge here, the first panel here is green, are markets that correlate with Microsoft, showing money flow into Microsoft. The second is the multi-time frame Laguerre or momentum. It's also strong to the upside. The chart Laguerre is straight up. This is called fractal energy. It's a measure of volatility. And when it falls, it means that volatility is rising. So that we've got a stock moving up on rising volatility. We've got a green background, which means that we have a multi-time frame trend on Microsoft to the upside. So although this is Unirenko and the analysis is done a little bit differently, and the other thing that you can see here is that just estimating, it had an area of resistance right here at around 141.11. And I'll tell you, it had a lot of trouble breaking it. That call spread was really bogged down for quite a while, but now it's cleared it. 2/3 candle close above an area of support or resistance, well, above an area of resistance, below 2/3 below an area of support is a clean break of resistance to the upside. I see Microsoft to 145, between 145 and 150. I really like it as a call position, and I would take either a call or a bullish spread position, and I think you can go 30 days out, 45 days out. I think this is a very, very conservative trade, and also you've got a moderate amount of positions crossing on Microsoft to the upside. I also watch what all the talking heads are saying. Usually they're wrong, but in this case, I think they're right. They're really pounding the table on Microsoft. So I sort of give Microsoft a 4.5 to 5 star move up right off of its current price.
It does seem to, if the board's going to go, you would imagine it would go because it's so connected to the S&P.
Yeah, it really is. Its relative strength to the rest of the S&P has been really excellent. I mean, when the S&P took a real pounding, it fell a little bit, but not a lot. You can see right here all the way to October 4th. Well, October, right here was October 8th. And then just rebounded like a rocket right back to the upside. I think relative strength is good. I think it's in a good spot for a nice bullish move up. I really like Microsoft, and I give this one my major endorsement.
All right, let's switch to a tech stock here. Well, actually, it's Precision Products. It's Agilent Technologies. The letter is A.
Okay, I know Agilent too, and let me just bring over Thinkorswim for that one. I don't have that. I don't have that one on my watch list, but I'm having trouble grabbing Thinkorswim. But let me bring it back over. Now, Agilent. It's a little bit tougher to analyze. I mean, we have the standard move down here, and we have a gap, and it's gapped up again. I haven't really seen any major activity in terms of buying or selling on Agilent, and if anything, I would have to be bullish on Agilent too. In fact, you have sort of the same pattern here as we had on the last stock we looked at, and if we go to drawing, drawing tools, we have a really similar pattern here. Boy, am I terrible with drawing. Let me tell you. Here we go. Okay. I mean, that's about the flag right here, and I'm just giving it a little bit of an estimate right here. Can move this up a little bit, but it's not really going to matter that much. I'm just going to leave it right here. And then what we have is we have Agilent coming up. Now we have a gap up right here. And now we're moving into an area of consolidation on Agilent right here. So basically, you have problems with areas of resistance right here. So you got some pretty tight areas that you have to be worried about right here, and right here. So Agilent's got to move through multiple areas of resistance before it can really break out. So in taking a look at this pattern, I would be really cautious on Agilent. It's got an area of resistance right here at 76, 78. It's got another area of resistance right here. It's got another area of resistance right here. And that's the top of the flagpole right there. So I would be very cautious in trading Agilent, simply because it seems to be pinned. It's, if anything, I think it's going to break out of this trend to the upside, but then it's going to hit multiple areas of resistance right here. 76.98, around 78.23, and then again at 78.83. So you really don't have a breakout of Agilent until you get all the way up here. That's a long way to go right now for Agilent, and it can certainly do it. But it hasn't. I would be cautious until you break this. Again, come back, test it, and then move back up off of that line. And that's
the 50 and the 200-day average is around 71 and 73.
okay.
So it has broken above it, even though they're inverted to the downside. We've had a bust up above it, so that's a positive. Now the question is, obviously, like you're saying, can it continue and hold its water?
Yep. I mean, I think if you want to trade it, I would trade it, above, right around 79 on a breakout, and then retest to 79 and then move up higher. So it's maybe about a 4% move higher before I would maybe a 5% move higher before I would consider taking a bullish position on Agilent. I certainly would not take a bearish position. I think in this consolidation channel, given the pattern, I think it's unlikely to break down unless there's a massive breakdown in the whole NASDAQ itself. But and a rising tide or the sinking tide is going to raise all boats and flow and drop all boats. But given Agilent compared to any other stock on the NASDAQ, I would not be inclined to trade it long until it trades right above this swing high right here. And that's the problem with Agilent. Be a little bit careful with it until it gets right above 79, breaks, comes back, and bounces off and flies to the upside.
All right, let's switch gears over to the consumer, because the consumer is employed and supposedly spending money, and when he spends money, they use a card called Visa. So let's take a look at Visa. It had topped out at 187. It had dropped under 170, and now it's back on the bicycle here at about 178 3/4 today, and it's about a 35-to-1 PE. And the question is that drop to 170 over, and we're on our way to go after the high? What do you think?
I think I have to tell you, there's been a lot of call buying on Visa. And I really like Visa to the upside. In fact, to be perfectly honest with you, I'm seriously considering creating a Visa call spread to the upside. I really, really like it. I mean, we could create a channel for it right here. There's a lot. There's always a lot of ways to analyze its technicals, and I'm trying to mash around here with this line and make it a little more trend-like. But right here was an area of resistance. You can see it broke it. If we squeeze, we've got nothing above, and I really see now Visa's in the lower edge of this trend line. It's kind of very poorly drawn. Let me bring it back here. But there's a tremendous amount of call activity on Visa. I really like Visa. I think it's got great fundamentals. I agree with Jim. There's a lot of consumer spending, and we're nearing the holiday season.
Right.
And I see Visa as a really, really nice long play. And I'll tell you, even though you would consider a break of the trend line and then a retest, I would go long. I would consider a long position on Visa ASAP, because I really, really like Visa. And there have been cluster buys. No single huge position on Visa, but just a lot of commitment of moderate size call positions, all at different strikes, different time frames, all the way out into December. But I think Visa is a great play into December, leveraging the holiday season, Thanksgiving, and then Christmas, and then New Year's. So I think I really like Visa. I mean, I think Visa is a great opportunity to make money in this market.
All right, let's switch gears to the medical field. The stock here is going to be Bristol Myers Squibb, BMY. And it's a company that in the last 2 months has been building and building and building and building. And the question is it going to blow off on the upside, or is this just a 2 or 3 month bounce and then it's going to go into the fade mode? Right now it's at 51.83. It's above both the 50 and the 200-day moving average. And it is paying over 3% dividend, and its PE ratio looks like it's around 13 and change. So a lot of those numbers don't sound so bad. What do you think of this thing?
No, BMY, I really like the pharmaceutical sector right now. I'll tell you, there's a lot of pricing pressure if you watch the ticker, because Trump is looking to squeeze the biotech sector. But big pharma has really been sort of immune to that. And I actually will tell you that I have a position on big pharma that I can't remember if it blew up on me. I was on Abbott, and it never matured. I mean, Abbott just stayed and sort of flopped around like a dead flounder, and it wound up expiring on a spread position at worthless. But I do like BMY. I think it's got more upside.
Clearing and staying above this 50 number is important, huh?
Yeah, absolutely. And, it's right around there. And you can see it does have a channel. It had a channel here. And it gapped up, actually, from here to here. And now it's trending in this channel. But again, I see Bristol Myers 52 right now. It's right now 51.08. I'd be careful right here. But if it breaks above 52, round number 52, takes a little bit of a move up, comes back, I would play Bristol Myers long. And I like big pharma. I really do. I think it's going to be a strong sector in the next 3 to 6 months.
This is a good example also of one of your technical theories in that it broke above 50. The moving averages are in the 47 area, broke above 50, and then you wait for it to pull back and test that neighborhood, which is what it did. And that would have been kind of your entry point based on your theory of let it break out, let it pull back to the breakout point, and then ride it from there.
Exactly. And you're right. It's exactly what it did here. Busted out, came back, moved up. I think it's good for another leg up. And, obviously this is not a very highly volatile position. If I bought the stock, I'd be happy to sit with it. If you bought an options position, I wouldn't buy a spread here. I would just buy a call position, because it doesn't have much volatility, and I don't think you're going to get much money out of the spread. I would just go with the call, but I see it as making a bullish move. It's just got to confirm its move right above 52, and it's got to maintain it. So it's got to break out, come back to 52, and then hopefully it'll form that next channel, and then the subsequent channel, and then the subsequent channel. There's no upside resistance. So I think you have a potential nice move up on BMY. I like it. And I like Abbott, which did not work for me. I like Bristol Myers Squibb. I think they're too. I like Merck. I think they're all good plays right now.
All right, let's jump over to biotech because we're in this medical field here, and let's look at something that has dropped from its 52-week high January of this year all the way down about 40%, down to a low in September of 215, and now it's had the ability to get above its 200-day, the 50-day moving average, which comes in around 224 and change, and it's Biogen. So is this thing a discounted value worth noting, or is something occurred here where rebounding is going to be very difficult?
Can I have the ticker on that, Jim?
That's BIIB, BIB.
That's right, BIIB.
And like I say, it trades 1 million or 2 shares a day, so it's pretty active. And like I say, it's feast or famine with the biotechs. When they got things cooking, they go through the roof, and when they get thumbs down, they hit the skids pretty good too. But this one has been trying to improve since September, going from 215 and trying to go up towards that 250. But obviously, it looks like 250 is a wall of voodoo right now.
Yeah. I'll tell you, I would be very, very careful. I personally would not. Since I've got so many, you've got so many stocks to choose from. Biogen is not one I would be overly interested in. In general, the options positions on biotech have been negative. There've been a lot of calls placed on some of the small biotechs, but I think like I said, a lot of it has to do with the fact that there's a lot of political pressure to bring pricing down of a lot of biotech medicines. And as we go into the first of the year, and as everyone goes out on the stump and is trying to win brownie points with their voters, I think Trump is going to be pounding the table again on biotech, especially the big biotech companies. And I just don't see any major move up here. It's coming off of a big low, but it's just almost in chop. I mean, I wouldn't even call this a consolidative pattern at all. I mean, it's got a floor here and certainly an area of support, but I just don't see this as a position that I would be too interested in to the upside. It's come down a long way, but I don't think that right now would be a great time to move into it, since it's got so much political pressure on it. And I'm not aware, and I watched the PFDA dates for release of the new medicines that come out, and I know that Biogen has nothing. There's no catalyst to give this thing a real kick in the pants and get it moving to the upside. I would be inclined to stay away from Biogen.
All right, we're going to go over a couple more, and then I'm going to turn it over to you to give some of your picks that you think are quite good.
Sure.
I'll pick 2 of them that I think look pretty interesting. One is because of the China deal, and the other one is because of marijuana. So the next one is going to be STZ, and it's Constellation Brands. And, of course, they have quite a lot of liquor investments, but they now also have a pretty good exposure, I think, to marijuana. Nevada and California, to name 2, have legalized pot laws now, and it seems like there's a new aroma in the air. So they could be positioned well, but they did get hit. They went from 228 down to the 180, 190 area. Now they're trading 196. Had a good day today.
Yes.
Is this the beginning of something bigger, or is this dead cat bounce? What do you think?
Well, I kind of follow this sector. I'm very, very conservative with my trades in the cannabis area, but the whole cannabis industry is just taking a real pounding. And Constellation Brands happens to be one that I really do like. I like this move up. It's got resistance right here. So it's just closing in on it here. It's got another area of resistance right here. An area of resistance right here. And an area of resistance right here. So it does have some resistance to clear. And you can see these are all pivots. And well, actually, let me take this pivot out here. I don't know how to delete it, but this one really is not particularly important. Here, here, and here is where I would be concerned. So really, your first area of resistance is 205.84, and that's a significant distance away from where Constellation is now. I like its diversification. I think I hold a cannabis position. I'll talk about it in a minute, which has just been absolutely demolished. Constellation Brands hasn't taken nearly quite the beating that the stock I'm going to show you has, but I think that Constellation Brands has a nice potential move up, and you can see right here what you have is sort of a rising triangle pattern. You've got the area resistance right here at 197.20, right where it is now.
Yeah, it's around the 50-day average. 197 is right around the 50-day average.
Okay, and it makes sense because.
And then the 200-day was 187, so that might be the reason it stopped down the bottom there.
Yep, I agree.
Yeah.
So
would you say this is kind of like if McDonald's had Beyond Meat on the menu? If it works, great. If not, we really got a business, another business that's powerful.
Yeah, I totally agree with you.
In other words, if the cannabis works out, fine, but people will still be drinking the other stuff we have.
You got it. Again, we're going into the holiday season, and I think it's a time when people tend to drink more. I've traded Constellation Brands quite a few times, and I really like Constellation to the upside. If it just clears this area here, 197.44, clears it cleanly, either breaks it and then comes back to retest, I think you got to move all the way up to 206 here. That's
all right. Let's quickly move over here to the China deal type company, because this company obviously has interest that would be benefiting from some kind of a China deal, and that's Caterpillar, and that's why it's obviously made a pretty good turn here from the 120 area, actually 115 to 120 area, up over 130. With all the new optimism with the whatever we happened last Friday. And the question is like I say, is it going to be able to sustain itself, or is it going to pretty much stay in this 115, 145 range that it's been in for a year?
Well, Caterpillar does have significant resistance right here at the 132.65 area. So I'd be really careful entering a position right now off this major swing pivot here.
Right.
I can squeeze this chart.
Could we get any RSI that might show the first peak towards 130 might have a certain RSI, and this move up to 131, if it has a lower RSI, could be giving you a little bit of a divergence signal?
Sure. Let's add a study.
But it's a cheap stock, 12 PE ratio, and paying over 3% dividend. And
no, I agree.
But cheap is going to stay cheap unless they got a reason to have more revenue coming in.
Where are the stochastics here?
The price of the soybeans has turned up pretty good, so the agricultural sector seems to be getting some legs because of the talks.
Agreed. And I'm looking for my stochastics, and I think I'm going to have to go to all studies here.
Oh, there they are down there, right there.
Yep.
RSI.
Come down here. I'll look at stochastic fast.
Yeah.
Here we go. So stochastic is in the overbought range.
But not a big divergence.
No, not at all.
Hmm.
And actually, I take a little bit of without divergence. I take a little bit of a contrarian view to stochastic, and when it's in the overbought region, I believe the bulls are in control.
Yeah.
So I like the fact that the stochastic is all the way up here.
Absolutely.
I think that if we get a break of 132, we could see Caterpillar move higher. And I'll tell you, there were a lot of, for whatever it's worth, a lot of talking heads pounding the table on Caterpillar. And Jim Cramer picked it as one of his major stocks to move higher in the next couple of months. And also there has been call activity on Caterpillar.
Yeah, I mean, obviously the 120 neighborhood was the time to slam the table, and you've gotten a nice $12 run off of it, because that 120 area is definitely, from late last year through this year, that neighborhood has been support.
No, that is a really juicy area to trade in. But
Right.
I don't think you've missed the boat. I think it clears its next area of resistance, and you can get a nice second leg up. And at least that's what the options traders are saying. And for whatever it's worth, that's what Jim Cramer is saying. And technically, I think got this nice big candle here, which I like. And I still think we got Caterpillar to the upside. I do like it.
All right, well, let's push away from the table here on the stocks that have been submitted and give you an opportunity to share with us some of the things that are on your radar.
Okay. First one is IIPR. It's Innovative Industrial Properties. Now, if you're looking for a stock that has been absolutely trashed, I'm going to change the time frame on this. Now, I have to tell you, this one has really burnt me quite a bit, because you can see it was up to 125, was even higher than that. And it has just completely collapsed. And what it is it's a cannabis REIT, and it leases out properties solely to companies that are interested in setting up some type of establishment, whether it's growing, selling, distributing, et cetera, et cetera. Now, it really looks terrible from a technical standpoint, but I just reviewed all of its, all of the fact that it's growing at a very, very fast rate. Its square footage that it has added in the last quarter has been significantly high. And I just think it's one of those stocks that have been way undervalued by the market. I believe it's a $120 stock. And if you want to take a bet on a really beaten down cannabis industry play that I think has a lot of potential to the upside, I wouldn't bet on anything in the next day or two. I would take a 45 or 90-day position or buy the stock and hold it. I think this is the number one cannabis REIT, and it has really just been trashed to death. And I really like it as a play off the bottom. I don't think it's going to fall anymore. There's no clear-cut area of support, but I just think that it's got huge potential to the upside.
If you widened out the chart, the highs that were hit in the first quarter of this year, are they somewhat in the neighborhood of where we pulled back? Because the short interest on this thing is showing 27%. If they got any good news, there's certainly plenty of people to to cover shorts at 27% short interest.
Well, I'll tell you. I mean, I can see why there's so much short interest. But I'll tell
I think
you,
they were pressing it, I think, from a valuation point of view, because it went from 39 up to 139, and obviously that's a huge run in 1 year.
Mhm.
And then obviously the valuation, when a little bit of tremors happened in the industry, and but it pays a 4% dividend almost.
yeah, it pays almost. It pays a good REIT dividend, and in addition, if you look at all the metrics of the company in terms of additional square footage, additional revenue, it's really a growing It's really a growing company, and I think it's been really beaten up along with a lot of other. It's been lumped into all the cannabis stocks.
Yeah.
I mean, I don't see much downside from here. And
The 200-day moving average, I think, is rising because it's at 87. And looking at the numbers, it would probably still be a rising number because most of the year has been above 87. So if it could get above 87, do you see that as a key number? 8 or 90, 87, 90, something like that?
Yeah, well,
because they would be then, if it got above 93, it would be above the 200-day and the 50-day again.
right. I think right around 92, 93. I agree. Right here.
But there's a decent amount of room between here and there too.
Yeah, there really is, and I'll tell you, this is one of those. This is one of the. I mean, I brought this up as more of a fundamental play than a technical play, because it's a company that has just been pummeled on earnings and growth that have just been really stellar. Each quarter, it has beaten its metrics. Its numbers, and it has still gotten beaten up. And I think as we move forward, you take the stock 2 to 3 years down the road as the #1 cannabis REIT. I think that it's got huge potential to the upside. Is this the best time to get into it? I think it's a really good time to take a position in it. Either buy the stock, or I would buy a long-term options position in this, maybe a long-term spread, or just take maybe a 2020 call position. It's not going to cost you much money, and I have one of those on a company called Albemarle, and every now and then I'll do that. And I think this is a company that's worth taking, a January 2020 position, just out of the money. And I personally think you'll be very pleased with it.
Yeah, I wouldn't call it the same type of company or saying that this would happen again, but an example of a company that got whacked off its highs and has turned around a bit is Roku. Going from 176 down to 100 area, and now I see today it's at 132. So if the story has merit, obviously it can turn around.
Right, and I think tech's a much riskier play than a REIT is, and I think this has been lumped into the cannabis stock area when they have nothing to do with growth, production,
getting involved in the profitability of cannabis. Yeah,
right. It's just all real estate, and I think that and it also it's got approval for real estate not just in the United States but also in Canada. So with their ability to leverage these kind of any kind of cannabis establishment, they're very aggressive. I think it's a great long-term position, and I hope someday you'll say, well, Mark Sachs told me so. But I really think that this is a great potential long-term play. It's not a trade that's going to make you money today or tomorrow, but I think 6 months to a year down the line, it's going to put a real smile on your face.
Well, we got time for one more. You got another one you could put up there, and then we'll let everybody know how to get a hold of you.
Sure. Let me just go back to my little phone ticker here. And okay, here's a position I really, really like. And I also I'm not going to put anything up that I don't own, because I'm backing it up with my own bucks. And LULU. I really like Lululemon.
Mm-hmm.
And you can see it got hurt and came down all the way to the 172 level, but we had a gap up here. Then it went into consolidation, which it is now clearly broken out of. And I really am bullish on this stock. And I'll tell you, it's going to expire in 1 month. I have a 200-210 call position, and Lululemon is at 204.40. I'm right about break even now on the spread. I think I paid about $4 for it. It's 440 into the spread. I see this stock with a lot of upside potential. There have been call positions placed on it. I've seen a lot of table banging by the talking heads on it, mm-hmm. And I really like Lululemon.
And it pulled back to the 170 area, which is the 200-day moving average, and so that was a good place for it to hold. And yep. Obviously, the momentum is turning up, as you can see there from the green.
Mm-hmm.
And it's also in an area where people spend money, which is on clothing, and it's kind of a like people like to go to Starbucks to get their coffee. It's kind of a name thing, right?
Yep. And again, going into the holiday season,
yeah, that's it. Yeah.
They're going to be buying clothes for their family and friends. I think it's in a great sector to close out the new year with, and I see this through 210 and higher. So this is one I would definitely recommend. This is a nice short-term holiday season play. It's got no resistance above it. I think it's a nice stock to get into any time, really. I mean, optimally, I would around 200. I think was the best price, even though it hadn't really technically cleared.
Yeah, there's a tiny little gap there under 200. Maybe it pulls back to there before it goes.
Yep, but I really like.
But the money in the last 2 weeks is clearly on the coming in, because we've gone from 185 up to 205, and like you say, the consumer is employed and he wants to buy some things, and this is not the priciest thing in the world, is it?
No, it's not. I don't remember the P to E ratio.
I'm talking about the item itself or what they sell.
Oh no. It's like, I mean, you could. These are things you can get at Macy's, and you can get anywhere at a really, really reasonable price.
And tailored more towards women, or?
No, it's men and women.
Men and women, okay.
Yeah, and
it's athletic wear, like the Peloton concept, right?
Exactly.
From the standpoint of active, get in shape, millennials, all that kind of stuff, right?
Yes, it is, and it makes nice stuff for guys, nice stuff for women.
Yeah,
and
it's got a buzz to it.
It does, yeah. And I think and listen, if somebody is only minorly athletic, or it's a suggestion for them. Mm-hmm. To do something, it's a great holiday season gift.
Well, both of these ideas you've given have a buzz to them. One has to do with cannabis and REITs, and the other one has to do with this clothing, right? So
Yes.
it's good to have a buzz, whatever you're talking about. All right, we're at the top of the hour, a little bit after the top of the hour. I'm going to instruct everybody to listen up and find out how you can get a hold of Mark Sachs and rightlinetrading.com. And if you have any special offers, Mark, this is time to throw it out there.
Well, basically, you're welcome to come to the trading. We have a live trading room that meets every morning. I trade the futures. This morning, I had 4 trades, 1 on crude, 1 on gold, 2 on the NASDAQ. All 4 are winners. This week, I have 8 trades, 8 winners. We're up close to $1,000. I only trade a small number of contracts, so everybody in the room can stay up with me. I call all the trades out in advance. You're welcome to come if you give us a call, 786-210-4300, or go to www.rightlinetrading.com. You'll find our number there. Just give us a call. We'll put you in the room for a week or more if you want, just to hang out, see how we trade. We'll make some dollars together, and maybe you'll want to hang out there for a long time.
That's great. All right. Again, that's the way you get a hold of Mark and learn a little bit more about how he's approaching things. And again, the room that he has and things like that. Right now, I'm going to turn it back over. By the way, before I leave, I'm Jim Kinney, and the company I work with is optionprofessor.com. So if you have any interest in finding out what I'm looking at and things that I'm thinking about, just go to optionprofessor@gmail.com. Until next time, guys, hang in there and good luck on all your trading. Back to David.
All right, thanks, guys. Lots of great info today. So thank you for that. And just a quick reminder to everyone: be sure to subscribe to Timing Research on YouTube and your favorite podcast network. Also, this weekend on Saturday, be sure to join us for another Synergy Traders event. I'm going to have Anka Metcalf and I are hosting this again, and we're going to have 5 good presentations. That's starting at 10 a.m. Eastern on Saturday, and Marina Villatoro, Mercedes Van Essen, Michael Guess, Neil Batho, and Anka Metcalf are going to be giving presentations. So you can get access to that at TimingResearch.com/live. And be sure to join us for that if you can. If you're not able to join live, the archives will be up on Timing Research Saturday evening to watch. So, for today, I just want to thank my guests again, Mark Sachs of RightLineTrading.com and Jim Kenny of OptionProfessor.com. Thanks, everyone.
Hey, thank you.
Thanks, David.
Bye-bye.